Trump just announced sweeping tariffs on imports to the United States. Now, there's a 10% tariff that applies to most countries, and there's higher tariffs for countries like China. And there are a lot of headlines out there right now talking about what this will do to consumer prices, what this will do to the overall economy and the job market out there. But what we care about on this channel is what will this do to the housing market? What does this mean for home buyers and home sellers out there? One caveat I wanted to say is this video is being recorded on April 3rd, 2025. The tariffs aren't scheduled to start until April 5th, and then some of them aren't scheduled to start until April 9th. So there's a chance that Trump walks back these tariffs and is just using them as a negotiation tool to get deals done with countries across the world. At this time, it's impossible to tell if he's bluffing or not, but given that they're supposed to start in just 2 days, there's a good chance that we will see these tariffs enacted. Now, what we're seeing already since these tariffs were announced last night is the lowest mortgage rates in 2025. The 10-year Treasury dropped over 15 basis points today. And if these tariffs are enacted, many economists predict that this will send the U.S. economy into a recession, right? There's already weak data and weak signs coming out of the job market and various other indicators across the United States. These tariffs could be the icing on the cake for that. If we do enter a recession, I expect mortgage rates and bond rates in general to drop significantly. We could even see the Federal Reserve start to purchase mortgage-backed securities. If you watched my most recent video, you'll know that this is the longest runoff of mortgage-backed securities that the Federal Reserve has ever done. Historically speaking, once they get to about this point, some economic force triggers the Federal Reserve to drop their interest rate again, drop the Fed funds rate again, and start buying mortgage-backed securities. This would lower mortgage rates significantly across the United States and could bring more buyers into the housing market. Now, there's a bit of a balance here where low-income buyers, buyers who lose their jobs because we enter a recession, they'll be out of the housing market. But at the same time, people who have kept their jobs, people who have stable income and a good amount of money saved up, will still be able to purchase properties. And I think, especially in markets like Vermont, where there's low inventory, that we will see the housing market start to pick up in general. We will see more buyers out there, potentially see more bidding wars, and maybe even prices continuing to rise. So we're going to dive into the sources and talk about exactly what economists are saying about how these tariffs will affect the overall housing market so you can make the best decision with your home purchase or sale. Before we get into it, my name is Liam O'Reilly. I'm a realtor here in Vermont with Jerry O'Reilly Real Estate. If you have any real estate needs, whether in Vermont or anywhere across the country, reach out to me directly. All of my contact information is in the description. I would be happy to help you. So we're going to jump over to our first article here out of Market Watch. What Trump's sweeping worldwide tariffs mean for the home buyers and home sellers out there. So this first part of the article is just talking about what Trump announced yesterday when he talked about these tariffs. And here we go into the first highlighted section. If President Trump keeps these tariffs in place rather than using them as a short-term bargaining tool, right? He could use this as leverage to get deals done with other nations across the country. If he doesn't, and these tariffs stay in place on the 5th of April, then we'll likely see bond yields continued on a downward pressure, bringing mortgage rates down with them. And that's what we already saw today. We see the lowest mortgage rates that we've seen here in 2025. We see the 10-year Treasury dropped over 15 basis points today alone. We take a look at the one-day chart. We see the steep drop off and then it rebounded towards the end of today. My guess is that's based on uncertainty. People don't know if Trump's bluffing or if he's telling the truth, and these tariffs are going to come into place on Saturday. We see here too with mortgage rates. East Rise Credit Union here in Vermont has their best 30-year fixed rate mortgage at 6.125%. That's about an eighth of a percentage point drop from the start of the day. So mortgage rates did tick down slightly. And again, if these tariffs are enacted, people are going to see that as a higher chance of a recession, as a higher chance that the Federal Reserve will cut their Fed funds rate, that they could start buying mortgage-backed securities. And we will see the market start to get ahead of that, jump into bonds and mortgage-backed securities, which would bring mortgage rates down. Now, scrolling down here, we see here, at the same time, the housing market may also feel more negative impacts from tariffs, such as rising home prices and a hit to economic growth, right? So the hit to economic growth, that's people losing their jobs. If we enter a recession, that's lower incomes, which would reduce the overall buyer pool out there. Now, at the same time, the tariffs are also on home building supplies. And they say here in this article we scroll down a little bit, the National Association of Home Builders estimates this would increase the cost of building by $9,200, right? Trump has wanted to lower the cost of housing, lower the cost of new construction across the country. We've talked about his executive orders in the past about how it's really just words. It doesn't really do anything to lower the cost of housing here in the United States. These tariffs would increase the cost of home building in the United States. There's no way around it. The imports would be higher, at least in the short term, until more manufacturing comes back to the United States and more home building supplies come back to the United States. But even then, will we be able to manufacture? Will we be able to make these materials at a cheaper price than we were able to import? I don't know. I personally am skeptical. I think this will raise the cost of new construction. Really, if you want to impact new construction, you need to tackle the local permitting process and the local fees associated with building. That could cut the cost of building by about 25%. So anyway, moving on with this article. On one hand, slower economic growth and higher recession odds and a sell-off in the stock market would push bonds to rally, causing mortgage rates to fall. On the other hand, higher inflation for longer and the possibility of the Fed keeping the Fed funds rate higher would push mortgage rates higher, right? I'm not so sure the Federal Reserve will keep mortgage rates higher, even if there's inflation from these tariffs, right? Tariffs tend to be transitory when it comes to inflation. It tends to be a one-time jump as people get acclimated to these new tariffs. And then after that, things don't skyrocket, especially if the American consumer is weak due to these tariffs, right? If the cost of everyday goods for the average consumer goes up, they will have less money to invest. They'll have less money to spend on discretionary spending. And because of that, we should see this one-time jump due to the tariffs, but we won't see spending skyrocket and see the cost of everything increase drastically as more time goes by. And that's what they talked about in this video here. I'm not going to play the video for you on this channel, but I will leave the link in the description if you want to take a look at it for yourself. Chicago Federal Reserve Bank CEO explains the problem of tariffs. And what he talks about is the fact that tariffs tend to be transitory, right? Right now, the Federal Reserve is kind of at a wait and see point of time. They want to see what happens with these tariffs before making any decisions. But he does talk about that tariffs tend to be transitory. We might see a quick jump in inflation, but we likely won't see inflation start back up and rev up like we saw in 2022, 2023. Now, moving here, that's what they say here. Whether rates rise or fall depends on whether inflation is temporary. So look, this is not going to help the home buyer out there who is at the lower end of the income spectrum, right? Those are people who are most likely to be affected by these tariffs, right? The cost of goods is going up. They have less money to save for a down payment. They might lose their job. Even higher income earners could lose their job due to these tariffs if businesses take a hit. If they can't make as much profit as what they have been without tariffs, then we could see layoffs across the country, which would obviously cause a recession and cause mortgage rates to fall. Tariffs will likely improve one of the three pillars in housing affordability, mortgage rates, but will worsen the other two, home prices and income growth. Okay, we already talked about the builders. It's still unclear how tariffs will impact the job market, he said. But even then, the trends set in motion on Wednesday are a net positive for housing. If this trajectory holds in 2025, it could be the first year since 2021 where housing meaningfully outperforms expectations, right? And that's personally what I think will happen. Now, it's not going to happen broadly across the country, right? Because there are some markets right now that are oversupplied with inventory. If you're in Florida, if you're in Texas right now, it might even be a buyer's market in those areas. But if you're in places like Vermont, places in the Northeast that have very limited inventory, right? There was a home in Vermont that had 14 offers the other day, and that's with the interest rates that we have right now. Now, that's not every home here in Vermont, and some homes are taking longer to sell, but we're at about a quarter of the inventory compared to pre-pandemic levels. There just aren't that many homes for sale right now here in my local market. If mortgage rates drop, we will see more buyers jump into the housing market, even if we lose the marginal home buyer who's at the lower end of the home buying spectrum. And that it's unfortunate, but it's just the reality of what I see going on in the housing market. So personally, I'm actually under contract to purchase a home right now. I think right now is a great time to buy a property. You want to do it before rates drop too significantly and before that added pressure from more buyers is there in your local market. Now, if you're in a market like Florida or Texas, it might be a little different because there's so much inventory in those markets that you might have some wiggle room and more time to adjust when rates eventually fall. But if you're in a market that has tight inventory, I personally think right now is a good time to buy, even though rates are still high, right? If we see rates drop moving into the future, then you can always refinance your home, but at least you have the opportunity to get into the housing market before the frenzy starts to kick off. So anyway, I hope you folks enjoyed this video. Let me know what you think the tariffs will do to the housing market in the comment section below. Thank you again for watching. I'll see you in the next video.